Welcome back to my channel. My name is Kingsley and you are watching Rhythm Holdings LLC. Please don't forget to subscribe to this channel. Don't forget to hit on the post notification button and don't forget to like this video so that the YouTube algorithm would also recommend this video for other traders. Thank you very much. This video is actually an update video on the gold analysis that I posted on the 5th of October 2024. So in that video I made it clear that my bias was to see gold sell, but anything can also happen and we can also expect buys. That is if the bias that I was looking out for during that day fails. But what happened was that things work accordingly as I predicted. So please, let's take a few minutes to watch that video.
Hello, welcome to my YouTube channel once again. My name is Kingsley, and today I'm going to give you a fair idea on how or what I am expecting gold to do. And today is 8th of October 2024. Currently, gold is giving me a downtrend vibe. But the fact that I'm seeing that it is giving me a downtrend vibe does not mean that it cannot also buy. First scenario, the reason why I am expecting gold to sell here is because one, gold has for the past days, this on the 4-hour time frame. When you look here, you will see that this is the 4-hour time frame. Gold for the past days has been giving me a lower high. Yeah. We have a lower high here. We have another lower high here. We have another lower high here. And then currently this here, this one here is the current lower high that gold is what is printing. So as you can see, we have a lot of lower highs going on, and when you join our trend line, through like this, let me show you. You can see that gold is what trending down. Gold is trending down. So this is one reason why I am getting a selling vibe. And also one other thing that I want you to also understand here is that when you look at the trend line, this trend line that I have drawn, this trend line here, you see that gold has given me my first touch here, second touch here, third touch here. Can you see? Yeah, but this third touch, I was expecting it to push and then break out of this structure. But rather what happened was that when gold touched this trend line, it rather came and gave me a lower high and then came down again, break the structure, came and retested it again. So now gold has break out of this trend line that I drew. Gold has broken out of this trend line, and after breaking out, it is consolidating here. So now we are looking at two possible scenarios here on gold. That is why I say that you do not have to rush trade. Now, because of this lower high here, because of this lower high, this is what I am expecting gold, my A plus setup. This is what I'm expecting gold to do. I am expecting gold to first break out of this structure, break this here. Can you see?
And in that video, I pointed out to you guys that I am seeing lower highs being printed on the chart. And let me go back in time and show you guys something. So actually, this is where the trend started. Initially, it was consolidating here. And then it gave us our first touch here. It gave us our first touch on the trend line here. So this was where we had our first touch on the trend line. And then the market continued to break out of this resistance zone, came back again, then retest the trend line again, then traded up came back and retested again. So this was the first higher high, the second higher high, and the third higher high. And the third higher high was here. Okay, so when the market traded to this zone, and came back to retest here, what I was anticipating to see was to see the market break out of this resistance zone. Not just that, but also break above this high. Then come back again and then retest this zone, and then the uptrend will continue. But what happened was that gold did not break this high, but rather it came back here, retest it, and came and gave us a lower high here. So now, instead of giving us a higher high, what gold did was that it gave us a lower high instead. So now we have a lower high here, and this one also gave us what? Another lower high. And then it continued to give us lower high, lower high, lower high, lower high, until it breaks out of this structure. So I told you that patience is everything that you need in that video. And then one other thing that I identified that made me to anticipate the market to sell more was that the market also break out of this trend line. This is the trend line, and you can see that the market break out of it here. And when it break out of this trend line, what did it do? It began consolidating here. And during the consolidation, let me show you something. In the consolidation, the market was giving us lower highs and lower highs. So I took this trade. I risked, I think I risked only $25 on this trade. But what happened was that I entered this trade a little bit earlier, so it took me off before this whole move began. It took me off this candles. Let me show you. This candle on the 1 hour time frame, let me go back to the 1 hour and show you something. I entered the market a little bit earlier, and my stop loss was also very tight. So I don't want you to repeat the mistake that I did. So I just want to tell you something. I entered the markets after I saw this bearish engulfing candle. Let me show you. After I saw this bearish engulfing candle, that was what made me to enter the market. And the mistake that I did was that instead of me to put my stop loss here, I wanted a very tight stop loss. So I went to the lower time frame. And then it was a big mistake that I don't want you to repeat it. And then my stop loss was, I think, somewhere here. It was somewhere here. But I should have put in the stop loss above this zone. Above that zone. The reason I'm saying that, let me show you, is that we have our lower low, lower high, lower low, lower high. And then we have our lower low, lower high. Can you see the trend? So my stop loss was supposed to be here. But instead, I brought it a little bit down here. And that was why when the market traded up like this, it took me out of the market before it even did what? Before it even went in my favor. So this is the mistake that I did that I don't want you watching this video to repeat. Anytime you are entering a trade, make sure that you understand the structure of the market. This is the lower low, this is the lower high, and we have another lower high here, lower high here. This whole thing here is the equal low, and then the market came back and give us another lower high. Can you see it now? So I knew that the market would definitely sell. So instead of me to put my stop loss at the immediate lower high, this is the immediate lower high here. This is the immediate lower high here. Instead of me to put my stop loss here, because if I had put my stop loss here and I entered the market yes did traded down, came back, it would never have touched my stop loss and then will go in my favor, because I knew that gold will sell. So the mistake I did was that I placed my stop loss somewhere here, and it was a mistake I did that took me out. So please, anytime you are trying to enter a market, don't just put your stop loss at anywhere like that. Make sure that your stop loss is either at the, if you are selling, your stop loss should be above the immediate lower high, and if you are buying, to your stop loss should be at the immediate higher low. This is an uptrend example that I want to give you. So let's say you saw this structure here and you want to buy this market. You see, let me use this as an example for stop loss setting, and you want to buy this market and you realize that the market has a resistance zone here, somewhere here, because it has really pushed the market around for a very long time. The reason I'm saying that is because the market, when the market finally break out of this zone, of this resistance zone, it sold here, came back again, came and push it down again, came and then push it down again, and finally it break out of it. So now if you want to buy this market, what you need is to wait for the break of this structure. So now we have a higher low here, a higher high here, another higher low here, and then we have a higher high here. Can you see? So if you want to buy this market, what you need to do is to buy it when it came and retest the zone here. So now when you are buying it from here, where should your stop loss be? Your stop loss should be right under the immediate higher low. This is the immediate higher low. So this is where your stop loss, should be. And your TP, you look left, then you will mark your TP, and that is where you ride the market to. So when you are buying, your stop loss should be at the immediate higher low, your immediate higher low. And when you are selling, your stop loss should also be at the immediate lower high. Don't try to make that expensive mistake that I did during my gold sell, because I saw the direction of gold, and what I did was that I did not place my stop loss at the right place, and it cost me money. So my stop loss was supposed to be here, but I made a mistake and it cost me a lot of money on the market. Please learn from me and don't repeat the same mistake that I did. My name is Kingsley. Thank you for watching this video. Don't forget to like, don't forget to subscribe, and don't forget to share this video. Peace.